Hello, fellow investors. Another quarter has passed, and I thought I'd give SOFI another screening, but this time would be the last time I'm doing it on the channel. The next time I'm screening SOFI and many other stocks, like Apple, Google, and Microsoft, will only be available on Patreon. Because to be honest, I cannot keep up screening all of the stocks and at the same time make videos about them individually. And yes, at some point, I'm looking to divest myself from YouTube and just focus on creating contents for my patrons. Now back to SoFi. There's really not much to look at their financials. They've just been burning money since going public. The rate of cash burning has been in like this ramped up turbo mode kind of burning. Also, they've been diluting shareholders in a not so palantir way, which is good, but it's also bad, financials wise. Many retail investors are actually invested on this, and I just want to help out and give as much information as I possibly could. Anyway, let's talk SoFi. Last time I screened this, it was at $5.74. I told you it would fall another 40%. Now it's $4.7. It's down almost 20%. We're halfway there. If we're talking relative strength, on the next market downturn, this could go south and sour. I may have saved this guy some money if they listened or not. I don't know and I don't care anymore. I hate to break it to you guys, but at $4.7, it's still a very expensive stock. You don't want to own this just yet. It's just too early to tell if it's even investable at this point. If I were you, I'd just be trading this quarter over quarter like I would on all unprofitable stocks. Now, this is SoFi's charts along with the fundamentals relative to the stock price. Unfortunately, aside from the PB, I cannot provide the PE and the price to free cash flow like I would on all other stocks because for unprofitable companies, they're all zero. Zero PE, zero price to free cash flow. This company is not worth anything really, aside from the equities if they sold everything and some company actually acquired them. Here you'd see the highs and lows of PBs it traded within the quarter. This is already adjusted with the diluted shares reported quarterly. The stock went from trading at 5 PBs now down to less than 1 PB. Let's just say it's a bad time for all growth stocks, and a lot of liquidity are pulled out of these markets. You can see how detached it was from the fundamentals from this quarter here. It was trading even more expensive than the JPMs of the world and the most profitable banks. Revenue growth is there obviously. That's the revenue multiple it's trading at right now. The equity is growing. Good news right there. But again, like I told you last quarter, it should at least trade cheaper than Citi stock. The black line you see here is my fair value for banks. This is 1 PB for each quarter. You could see it's just been playing around this price here, $5 to $6 range, since forever, since all-time highs. This quarter, 1 PB for SoFi is $5.59. Again, it's expensive at 1 PB and it should trade cheaper than Citi, the cheapest profitable bank. That explains the blue lines. The blue lines are Citi stock's PB range relative to SoFi's stock price. The higher blue line is Citi stock's high price PB for the quarter, that is relative to SoFi's stock price. The lower blue line is Citi's low price PB for the quarter, that is relative to SoFi's stock price. If you recall last quarter, I gave you $2.83 as my ideal entry for SoFi. $2.83 was the PB of Citi's current price at the time relative to SoFi's stock price, and it falls within this exact range here. In layman's terms, if SoFi is trading above these blue lines, it just means you're buying it at levels more expensive than the profitable bank that is Citi. If you buy it within this range of blue lines, you're buying it at the price of Citi stock. And lastly, if you buy it below these blue lines, you're buying it cheaper than Citi. For an unprofitable company burning cash, diluting shareholders, trading more expensive than Citi just doesn't make sense. I will make a video on how you should approach growth stocks because clearly you don't understand them. If you're DCAing on this from $8 and up, obviously it feels like you're catching a falling knife and it is a falling knife if you can read and understand financials. The stock market isn't about investing in SOFI stock at $8 in 2022 and breaking even in 2024. The stock market isn't about the first to invest. It's about investing at the right time and the right price. I get it, it's all in hindsight. I mean, where was I before this all happened? But here I am now, and I'm telling you this. Never DCA blindly in an unprofitable company. Have some process, listen to some people, and subscribe to this channel because the fundamentals, the financials, the numbers don't lie. And I will try my best to translate them for you in terms of stock price, which we all care about. So you won't just blindly buy into a stock that a guy on YouTube is pumping. See you next video.